Trading day and the week and the month. We are now in the closing bell market zone. Commercial-free coverage of all the action going into the close. CNBC senior markets commentator Mike Santoli here to break down these crucial moments of the trading day. And today we've got BB8 Capital Partners CEO Barbara Duran back as well. Welcome, Barb. We'll kick it off with the broader market. Stocks are rallying on this last day of May. The Dow and the S&P 500 on track for monthly gains. NASDAQ still on track to post its first monthly decline in 6 months since October, but is up more than 2% for the week and is outperforming. What stands out to you, Mike, in terms of where the leadership is in the session today? Because you got real estate, technology, and utilities, which is an odd mix of defensive and sort of risk-taking within tech. What does that tell you?
Well, I would say arguably those are lower yield plays, at least on cosmetically. They do better when we're not talking about treasury yields rising, reflationary forces in the fore, and the whole cyclical story gaining pace. But I don't think today is necessarily indicative of what the market has been doing in a larger sense, or even what it might do. I think the market's finding a way to stay supported. This really prolonged sideways period is, I guess you could look at it and say it looks fatigued. It looks like leadership is kind of waffling. On the other hand, it's a bit of a restorative regrouping phase because, 6 weeks ago, I would have told you things look way ahead of themselves. This market ought to flatten out or correct a little bit so that we can reset sentiment and everything else. And I think that's probably largely happened right here with no net damage really to the overall indexes. And I think that's probably the more upbeat take, even if it doesn't mean we're off to the races as seasonal effects get a little bit dicey in June sometimes.
Bob, what's your take on that for the rest of this year? Do you think there's a lot of attractive risk reward with broader U.S. indices?
No, I don't. I think, this market has been very difficult because we've seen these extraordinarily rapid and severe rotations. And I think we're going to continue to see that. And I think there's just two very simplified answers. And one is valuations are really like late cycle valuations for just about any area you look at. Two, as we know, there's great support for fiscal stimulus and the Fed's commitment to keeping rates low. And I think the market believes that. I think the market is accepting their view that inflation is transient. So it's really a sort of a market that rewards patience. You have to wait for your shopping list ready, and as things correct, look at the growth stocks, a lot of the FANG stocks. They have not been doing well this year. But in the last 2 weeks, they had a resurgence. And my view is why? Because the other stocks, the cyclicals, early recovery, opening stocks, had run up. So it's just going to be a continual chasing of where is the value.